Hello friends, in the last video we discussed about a simple prompt for integrated financial statement analysis. I request and urge you all to view the last two videos to understand what I mean by integrated financial statement analysis. So now we will move to a structured prompt to do this financial statement analysis where you can gather a lot of insights, multi-dimensional insights. So that will be useful for your analysis of the company. So straight I take you to the prompt. So this is the prompt where first I set the character or role play. This is what I call as a role. So I'm telling the model that you are a senior financial analyst and hence accordingly do a financial statement analysis. So I'm saying that I have provided balance sheet, cash flow and P&L statement. With that you have to perform the analysis. All the below sections you see is what I have set the constraints or whatever I set as a direction for the model to follow. First section 1, I want to do health assessment where I calculate different types of ratios like leverage ratios, solvency ratio, liquidity ratio and so on. So those ratios calculated. Then comes the profitability ratios. Within profitability ratios, I asked it to calculate ROE, and ROE, there is something called as DuPont analysis where you can um, postmortem the formula into three types, and hence I asked to perform the DuPont analysis and identify there are three drivers for DuPont analysis: net margin, asset turnover, and equity multiplier. In the prompt, I'm requesting it to identify what is the primary driver. So like that, I have set different ratios and also I'm telling what it should infer or what it should analyze. Example, operational efficiency analysis. Here I'm talking about all the turnover ratios and the number of days like cash conversion cycle, all that. And I'm telling analyze with industry benchmark, cash flow timing, etc. Asset utilization, this is something to do with the asset turnover, how much times revenue it generates with the overall fixed assets or total assets it has. So all that formula I have completely set in this prompt, and it's a very long prompt, and but I can say this is the ultimate what you can do as an analysis on a company financial statement. Of course, this will evolve as and when new ideas come or new formulas or something comes up. This can definitely evolve over a period of time, but for now, I have tried my best to absorb every possible scenario in this prompt. So this I copy and I'll go to Cloud. I'm using Cloud because the report expected is quite huge, maybe 3000, 4000 words. And Cloud is good in handling huge volumes of output when compared to ChatGPT. So now I'm taking two statements. One is from Carborundum financial statement. The other one is Gensol, which we'll see after this. So it gives the executive summary first, followed by, I told you, right, section wise I have given some uh, boundaries like leverage analysis, so on. So after each analysis, it gives its interpretation or what are the key insights or any risks is there. For example, cash has improved. Some cash has improved from 0.02. Cash ratio has improved from 0.02 to 0.62. So that is coming out as strong cash position. Then profitable analysis. Then it says it has a strong pricing power. I had asked as a question whether it has strong pricing power, and it says it has a strong pricing power. Then ROE, I asked to dissect using DuPont analysis. It is done here, and it is trying to say the 16% ROE comes from 13% net margin, 1.06% from asset turnover, and 1.13 times from equity multiplier, that is its loan or the debt, whatever it has. So similarly, it has calculated every parameter whatever I have outlined in the prompt. Then there is something called as cash flow quality assessment, which is based on the numbers in the cash flow statement. Okay. Then growth metrics. So it talks about growth, and as we go down, it even analyzes the cash flow patterns like operating activities, how much money, investing activities, how much money, and financing activities, how much money, and what is the interpretation of that. So I told you it's going to be a big analysis, right? You can see still the model is generating the output. Shareholder value analysis. So what is the dividends they get? What is the EPS? And so on. So shareholder analysis. Then in terms of cost structure, like how much of it is the material cost, how much of it is the employee cost, and so on. It dissects the cost as well. Then I have asked about the competitive positioning and whether there is a moat. It says pricing power, despite cost pressure, there is a improvement in gross margin, which means it is able to pass on the price rise to its customers. And in terms of moat assessment, it says it's moderate to strong. Then what are the risk factors? Financial risk, what is there? Whether it is minimum, high, all that is captured here. And some few additional insights about management indicators in terms of how they are disciplined in capital allocation and so on. So this is the complete, what can I say, a multi-dimensional view of the financial statement in your hand. This otherwise I would take even days to put over and get the inferences. Maybe you can put a Excel very easily, but gathering the inferences usually takes time. And some inferences, what you see in this model output, you may not get so easily when you do it yourself. So this you can download as a PDF as well, save as PDF, and you can print it and analyze in depth. Okay, so I'll close this and I will just now run a totally opposite scenario with this Gensol engineering. Quite a few of you must be knowing that there is some issues of controversy around that company going on. So we'll run that statement and see how the output comes out. This, in fact, even before I tell, it says you can see that this represents a stark contrast to the previously analyzed Carborundum universal. Because I told you deliberately I have taken two extremes. And as the analysis start, the first line it says is I'll perform the Gensol engineering. This is a contrast to whatever I saw earlier. So the model is able to identify all those differences. So key concern like executive summary. On top itself, it mentioned it has a debt equity of 4.4. I think anything about 1.5 or 2 is seen as a benchmark or risky. Interest coverage also is less than 1. Interest coverage is less than 1. So then it again the same structure, whatever we saw, same structure comes out. And after every analysis, it shows its concerns like there is a leverage concern, there is inadequate debt servicing, there is a risk for refinancing, and there's a big red flag. So all those beautifully come out in this prompt. In this prompt, the analysis gives you everything about the reality of what is there in the financial statements. Cash position is inadequate. There's a pressure of working capital. Then deteriorating liquidity metrics. So this was one reason why I took a extremes to show you that how the model is able to uh, bring out these insights. Then there is reduction in margin. Then there is a declining asset efficiency, concerning trend, asset turnover decline. Then warning, high ROE mask underlying operational inefficiencies and is unsustainable giving leverage trends. So by looking at this report, one must be whoever is into long-term investing must safely avoid this company or analyze further before taking any positions. So negative free cash flow. Let us see cash flow statement thing. It is very clearly telling severe earnings quality deterioration, cash conversion failure, unsustainable pattern. Critical concern, negative operating cash flow with high debt servicing requirements create financial distress risk. Then shareholder returns, no dividend, strong EPS growth, that is good, but it has diluted the book value due to equity dilution and so on. Then final summary, unsustainable leverage, too much debt, negative operating cash flows, which is not favorable. In the interest, even to service the interest, the money available with the company is not sufficient. The liquidity is very bad and it badly depends on external financing even for its working capital or day-to-day requirements. So all this has beautifully come out and it's very high risk investing in this. Risk is financial distress risk, liquidity crisis potential. There will be challenges to refinance it tomorrow and project execution risk because EPC business models have vulnerabilities. So investment thesis somewhere it will tell that it's only for someone who has a high risk appetite or who are into turnaround and distressed investing. And it very clearly says, you read this, very clearly says avoid, simple avoid. Okay, So this also you can download as a PDF. Here you can see last one, investment recommendation avoid, and what is the reasoning. So you can download as a PDF and analyze. And in the next video, we'll catch up with a toned down version of this prompt or dealing only with financial ratios. Till then, bye.